Good afternoon. I found myself in a very unfortunate situation. This is typically, when someone makes a presentation or a speech before the lunch, we say, I'll be quick because I'm between you and lunch. But now it's like in the really essence of the word, because you had a break and a lunch is awaiting, and now it's only the speech between this break and lunch. So I'll try to be quick. I'll try not to be, so to say, that much institutional. But anyway, let's start. So, good afternoon, ladies and gentlemen, colleagues, investors, and dear all. And before I begin, I would like to congratulate the Lithuanian, where are you? Lithuanian Investors Association and Better Finance, the European Federation of Investors and Financial Services Users, for putting the event together. And I think the topics on the agenda are not only timely and relevant, but also very, very high on my institution's agenda too. And therefore, I'm so grateful to the organizers for providing me this stage, For my intervention, I took like this topic or the name of the conference as a, so to say, as a way to think what I want to convey: shaping the future of finance, shaping the future of finance. And thinking of that, I remember the Albert Einstein quote. He said once that if you want to know the future, look at the past. So that's what I did. I started with a major innovation in finance. Okay, I wrote this myself. I'm not sure if you agree with me, but if I ask what you think could be the major innovation in finance? Huh? Accounting. That's huge innovation, agree. It's not in my, but I absolutely agree. It's finance. I understood financial markets. I think introduction of paper money. It was a huge innovation in finance. And, we need to do a little bit time traveling, some like 500 years ago, if you want to still stay in Europe, not in China. But in 500 years ago in Europe, the continent was experiencing influx of precious metals from the New World, and this resulted in the debasement of currency and the gradual emergence of paper money. And after then, centuries passed. Cash, I can show you, I have some banknotes, still with us. And gold and silver are with us too, having an important place in the financial system, just that they provide now function of a store of value and offer quite a good hedge against inflation. All right. So what about another important innovation? I don't dare to say it's major. Maybe it's major, but important at least. Innovation in finance, a little bit, so to say, closer to us. Let's say in the end of last century. I won't ask you again, but I think introduction of electronic and online payments was a major innovation in finance. It was a kind of means of finance. The growth of the market was definitely exponential. From day zero, there were predictions that all countries will turn completely cashless. And the recent ECB research shows that in the euro area, cash use remains persistent among a broad spectrum of the population despite increasing digital adoptions. Large segments of society still prefer paying in cash for many reasons. In this example, as in the first one, we see that financial change, major change, was neither complete nor full. And I think these two, but I had quite many of them, they have at least one element in common. Financial changes, especially at the initial stages, are often accompanied by inflated expectations and grandiose predictions. Changes do occur. They are an indispensable part of our financial development. However, they are not necessarily overarching or overriding. Gold, silver, cash, they still have an important place in finance. And if Albert Einstein is right that history is a guide, then the lesson is to manage expectations about the future. To think not in terms past or future, but past and future, because they are good at complementing and bad at opposing each other. Past has a lot of persistence, and this is optics at which we should have in mind when think about future. So let's get, we set the scene. So what is shaping the future? I limit myself in Europe at this juncture. I was asked to make a speech, not a prophecy. And recalling the exaggeration of expectations at the outset of changes, I'm sorry, I will escape the temptation to dive in the ocean of buzzwords, concepts, technologies, means, and will focus rather on two forces that I believe are shaping the finance. And definitely, it's only two, it's not a closed list. It's not a closed list. First, okay, I made a too long pause. It's not that intrigue. Increasing computer power, trillion-fold increase in computing power. I understand it may sound very common, very, so to say, familiar. What are you talking about? So simple, maybe? Boring. But it was the exponential growth of computing power, accompanied by exponential growth in the computing efficiency and data storage capacities that enabled the spring of advancement in technologies, DLT, AI, all the others, and management of data, and to be more precise, big data. And who knows if there is a limit of growth of this computing power? Can it go to the infinity and beyond? And how this will change our technological advancement and eventually also finance. Anyway, this has already led to exponential growth of technological applications in finance and beyond. And let me take one example, artificial intelligence, very recent one, a lot of talk about this. Computational power of artificial intelligence models has been doubling every 6 months in recent years, and it means quadrupling every year. And research indicates that complexity of AI models is roughly the same as one of the human brains if measured by the number of neurons and the connections between them. Research shows that artificial intelligence is getting increasingly sophisticated in analysis of big data, extracting the patterns which otherwise are hard for us humans to detect. And by months or even days, it's getting better and generating insights, which is subsequently applied in various ways in provisions of financial services. And there are, here in this hall, there are many people from like real companies, fintechs, banks, industry. They know it very well. Is the picture so rosy? Well, I'm from central bank. ECB's analysis indicates that if new AI tools are used widely in the financial system, and if AI supplies remain concentrated, then operational and cyber risks, market concentration, and too big to fail externalities may increase. Furthermore, the widespread adoption may harbor the potential for increased herding behavior and market correlation. So what is AI? It is as it is, or it is what it is. It is artificial technology. And technology is neutral by definition. It can be used to detect financial fraud, but it also can facilitate the illegal activities and such as financial fraud. Therefore, I think spur of computing power leads to the future that is neither black nor white. It leads to the vast gains in productivity. It will enhance risk assessment, investment strategies, provides unprecedented insights and opportunities, and at the same time, it carries risks, for example, for financial stability, data privacy, and confidentiality. Why? I wrote it 10 minutes ago. Why? Because, and no, there is an answer to the why. Why? Because there is human behind every technology.
Thanks God.
There is God also.
Yes.
Agree. Okay, so that was about technology. What about data? Technology does not exist without data. Of course, without human too, but without data. Data is fuel of application of technologies in finance. Super technologies, we do have them, need super data, big data. But to make data, big data useful, one needs to ensure it's timely, it's granular, it's efficient, it's collected once, it's discoverable, it's accessible, it's open. And those from industry, I think, understand very well. What's also very good, that institutions started to understand this very well too. And they are transforming data management systems. And let me provide an example of my institution. Increasing data management maturity is our strategic goal. And our latest steps as a regulator will allow not only to reduce the administrative burden on financial market participants, but also to manage data more efficiently and to make it better accessible. For instance, at the beginning of this year, the banks operating in the country began to provide supervisory information to the modern reporting system. Lietuvos Bankas joined the European Commission's Data Center Initiative, which aims to promote the development of European finance. The initiative useful for financial market participants, in particular, fintech institutions. And the second force, I said two, it was long ago, but now I turn to second, which shapes actually the environment in which finance operates. It's geopolitics, unfortunately or unfortunately. Besides being important per se, it's a significant push factor for deeper integration of European economic and monetary union, which, for short, unfortunately, remains incomplete. And one element it lacks is the capital market union. ECB research shows that while total assets held by non-bank financial institutions in the euro area doubled in the last decade, European capital markets are sadly lagging behind other markets. And for example, the overall availability of risk capital in the EU is roughly 10 times lower than in the United States. And fully integrated capital markets union provide plenty of opportunities such as enhanced liquidity, reduced cost, increased competitiveness. Significant progress has been made, but challenges remain. In particular, in terms of the regulatory harmonization and cross-border investment flows. To overcome these challenges, we need a concerted effort from all member states. And this is time-consuming. Why? Because we have a lot of inertia of the past. Past is persistent. We, as a central bank, are aware of the difficulties to come to the if we consider EU decisions. And therefore, with Ministry of Finance, we are looking for regional tailored solutions to increase our capital market attractiveness. And I will just mention a couple of them. First, supervisory authorities across 3 Baltic states have come to the agreement to harmonize the national requirements related to the public offering of securities. And second, to reduce the cost of raising funds needed for business development. Bank of Lithuania, together with colleagues from Estonia, Latvians are not here, to my knowledge, but also with Latvia, from Latvia, agreed to establish common information disclosure requirements and thus create opportunities for companies to publicly offer securities in all 3 Baltic states. Ladies and gentlemen, what I know for sure, future finance will be different. How different? I don't know. But definitely it will take at least one thing from past, the nature of finance itself. And here what I understood, finance, we talk a lot about finance, is not for the sake of finance, but to serve well-being of people, our citizens, customers. Finance is here to allow, distribute financial resources, provide financial services, and create trust across millions of people that are complete strangers to each other. What has been changing are means of finance: silver, gold, bonds, equities, currencies, cash, digital money, virtual assets. But all these things are just to facilitate the process. The fundamental link between finance and trust needs to stay and will stay, no matter how far we go into the future. Lunchtime. Thank you.
Thank you so much.